All right. Well, thank you all for joining us. So, if you're not familiar with Brand Pollinators, we started out as a marketing consultancy, but we've really become like a hub for emerging impact brands. And so now our community is just really full of these amazing founders who are building products that are better for the world. And we just try to give them as many opportunities as we can to collaborate with each other, share insights and resources, and then of course, help elevate each other in the process. So our monthly call is open to anybody. We provide a ton of other services that are just for members. So we do personal introductions to fellow founders, hand selected awards, events, pitch contests sent directly to you, discounts with preferred partners. I usually do office hours for our members. So we've got all kinds of stuff going on in our community. If you want to learn more, you can visit the website, brandpollinators.com. Today, we are here to talk about preparing your brand to raise capital. So our guests today are Scott and Steph, and they are from Silverback Ventures. So Scott is a 3-time entrepreneur, consultant, growth coach, speaker, and impact investor. He has 30 years of accounting and C-level experience, and he is a master of optimizing operational and financial processes to help companies unlock growth potential. And then Steph is basically a change management guru with extensive senior leadership experience in human resources and process improvement. And she's supported companies large and small by facilitating strategic planning, coaching, transformational leaders, and training senior management teams for smooth transitions. So together they manage Silverback Ventures, where they work specifically with enterprises that focus on profit and purpose. So the goal of Silverback Ventures is to amplify impact by providing support in the form of education, consulting, and impact investing. Thank you guys for being here.
Well, you did a very good job with that. That was a mouthful for sure. So
That was a lot.
appreciate all of that. At the end of the day, guys, it is really about helping amazing people doing amazing things, do it bigger, better, faster. We are really, truly about amplifying and multiplying. Steph and I both have spent a lot of our careers with businesses that, their primary focus was making money. And what we found is that we really are really good at working with people that are all about not only making money, but doing something amazing in the world. And we're both at a part in our career. I will speak for myself, not for you, Steph, that I'm like, look, I'm too old to be dealing with people that just want to make money. I want to help people that are changing the world around us. And that's what we're aiming to do through this call and through Silverback Ventures. So we definitely started that business with that in mind, and then we will only take on those folks that have an equal focus on purpose and on profitability so that you can amplify those purposes.
Awesome. I'm so excited to talk with you guys today because I know I've heard of a lot of the things that you've done with your clients, and it's a crazy world out there right now, especially for people raising capital. I mean, oof, there's all kinds of stuff going on. So I guess one of the biggest questions for this group is if you have a company and you're really hoping to make a big impact with your brand, but you know that you need to get some investment, like how do you make sure that that vision is like not watered down or kind of shoved aside when it comes time to invest? Because I feel like people are having to make a lot of compromises when they're approaching investors.
That's so incredibly true, Kate. So incredibly true. And one of the things I commented on one of your posts on LinkedIn ahead of this event, and this is something I work with students a lot, and I talk to them about it. And it's usually about relationships, but it definitely translates well into the business world. Anytime you're getting into a relationship, whether that is with a partner in your business or with an investor, you've got to be in a situation where 1 + 1 is greater than 2. They've got to be bringing something to the table that is beyond dollars. That there's a variety of different avenues to get money, right? You can go to a bank and get a loan, easy. All they want in return is interest. But if you're starting to talk about investors that are going to be partners in your business, you've got to be focused in on a shared value and a shared vision. If you're not creating and seeking out those people that share what you're trying to do, it's going to be very transactional for the investor. And while that may be good for you in the short term, it doesn't bode well in the long term. We've got to be able to find people and companies that share what you're trying to do and really be able to bring something to the table. You know, Stephanie and I wouldn't be partners if we were equal, had equal backgrounds, had equal experiences. It wouldn't help us. But I know that I can turn to Stephanie and go, okay, I don't have any idea what I'm doing here. And she's going to have that. It's the same with your team bringing in, and it's the same as you bring in potential investors.
You know, another thing that I would add to what you're saying is it is your vision, right? And so when you start compromising your vision for your investor dollars, it's not your vision anymore. So as you are doing capital campaigns, or if you're in a not so much an investor, but a donor situation, you know, don't compromise your vision, but you also have to know what your vision is. It can't be so broad that you can't just do the, 30-second elevator spiel to explain what your vision is. And that way you won't be swayed from what your absolute principles are.
Oh, that's an extraordinarily interesting point, right? Yeah, I hope you heard what Stephanie said. When you're thinking about a donor and investor, right? Most people think about donors being involved with nonprofits. We have a handful of clients that are nonprofits. And what I think is interesting about the way nonprofits approach getting money, it is all about selling the vision. The donor doesn't expect anything in return other than for you to do what you do better and for you to impact your community in a way that resonates with them. If you start thinking about your potential investor pool in the same frame of mind as nonprofits think about donors, it will put the right people in your path more often than not, because they're going to share, they're going to get on board, they're going to get excited about what you're telling them, right? I mean, Eli, you and I have not met, but I know Grace from Surge Snacks. And when you guys started talking about what you were doing and providing, and what's cool about this group is everybody's doing something amazing that's going to make the world a better place. It's super exciting. That's why we do what we do. But being able to provide a nut-free trail mix to your teammates on your cross-country team, people can resonate that if they buy into the vision. They want to do something to help. Those are the types of people you want as your investors, because they're going to be adding value beyond just giving you $1. Does that answer your question, Kate? I know we went a little bit further than that.
Yeah, no, that's great. So like, how do you find these people though? I mean, if you are trying to meet with investors, and you've got some people lined up, or, maybe we can talk about where you can meet people, but also what kind of questions you can ask people when you're looking to find these right partners.
Scott's going to do a great job of answering this, but I want to interject this before Scott starts talking about it. Sometimes just talking to your circle of influence can become your investor pool. So don't eliminate your sphere of influence as someone that could be your ask.
This is why Steph and I are partners, because I was thinking the exact same thing. I'm like, you have to talk to people immediately around you. You're going to have those folks that will immediately agree with whatever you say. It's like the parent who says to their kid, yes, you can totally be on American Idol. You've got the greatest voice. You've got the voice of an angel. And they get up there and they sound like they can't carry a tune in a bucket. Weed out those folks. You need those people in your corner to be a cheerleader for you, but they're not your investors. You want people that are going to ask you specific questions that are going to help you grow, right? I mean, one of the things, and this is going to lead us down the path as to who. I mean, if you start small and build your circles outward, again, if you go under the idea that you want people that are buying into your vision, You've got to start with people that know your vision. You've got to put yourself out there and be in the groups that are going to provide you opportunity to talk about it. So, for example, and some of you that I've known and talked to, you know that I hate networking groups. I hate them with a burning passion. I think they're a complete waste of time. Why? Because the only people there are sellers. There's no buyers.
Mm-hmm.
So I would much rather spend my time with those folks who are working with people that are buyers. Now, for us as consultants, we talk to the influencers, we talk to the lawyers and the accountants and the tax people and the insurance people, because they know their client. Why? Because they're invested in their client in one way, shape, or form. It's the same thing for you guys. Talk to those people who are intrinsically invested in what you do, whether that be a supplier or that would be a superstar customer. Think about what they desire and how and why they buy your product or service, because they buy into your vision. They know and want to support what you're doing. And then ask them, hey, you know what? Again, this is going to get me in trouble on a call like this, but it's something that's important to me, because 99 times out of 100, you need less money than you think. Hear me when I say that. Now, don't automatically hang up and go, this guy's a moron, I'm not talking to him anymore. You likely need less money than you think. Pressure and breeds diamonds, right? It creates opportunities for innovation. When you think about your business, again, let's go back to the nonprofit. When you think about your business as a nonprofit, like, okay, I'm not going to get any money. How do I continue to do what I do with no money? Now, we all, in the life cycle of our businesses, are going to need cash. Most businesses don't scale like this. It's not a 45-degree angle. It's a step function, right? You have to have a catalyst event to get you to the next level of business. Very often, that catalyst event is either precipitated or followed by capital. We want to put you in a position where it's followed by capital, because people are excited and they're calling you to give you money. How do I get in on this? So I would say one of the things that we coach all of our founders through is, okay, really hone in on exactly what you're going to use the money for. Little nuggets. Do not, under any circumstances, put in your pitch deck to an investor that you're looking to add people. Investors will not invest in payroll. They should. Ultimately, they're going to, right? Let's be straight. If I gave every one of you $100,000, you're going to add some people to your team. But talking about it in terms of adding people is a turnoff for potential investors. They want to know, for every dollar I invest, how is that going to increase your ability to deliver on your brand promise? If that means you're adding somebody in your marketing squad, great. But talk to me about what changes you're going to make in marketing to attract new customers, not the fact that you're going to add somebody at $100,000 a year. Don't talk to me about adding a salesperson. Talk to me about penetrating markets. It's semantics, guys. Honestly, it's semantics, but I'm telling you, more than I know my name, investors are going to look at that and go, nah, why would I invest in your payroll? I want to see a direct line from dollar invested to dollar returned. And that goes into the context of who you should be talking to, right? There's a variety of different ways. You go to the bank, they give you money, they ask for interest, they collateralize whatever they collateralize, right? Easy peasy. If you can get it, great. If you can't get it, which is often the case lately, then you have to find someplace else. You've got your friends and family. That's always a good source, but scary, because if it goes sideways, all of a sudden nobody likes you. And
that's a good area to interject, that when you practice first with your friends and family, so they're your biggest cheerleaders, but they're your worst critics as well, right?
100%.
They're going to ask you 1,000 ways of how you can do that. It's
not going to make money. Yes.
Right.
Yeah. I would never suggest, and Steph knows this, I would never suggest you go to friends and family to get money to start your business. Sometimes it's necessary, but oftentimes they're not going to be able to give you what you want. they're going to immediately ask you about it every time you're sitting around the dinner table for a holiday. Like, okay, so what's happened with my money? So that leads you to the next stage. Like now you're talking investors, institutional and angels and private equity, all of those things. Angel investors are just one step up from your friends and family, right? But those are the people that you really want at an early stage, really want to impress. These are folks that you're trying to get into sharing your vision. I know I've said it 3 times, but that's where it needs to be. If you can get somebody to buy into where you're going, and this is why Steph said it is crucially important that you know specifically what your vision is. It is not a statement on the wall. It has got to be your definition of what success looks like 2 years, 3 years, 5 years down the road. Because if I can buy into where you're going, again, think about it from a donor's mindset. I want to give you money, but I also want to be able to participate and say, hey, I can help you get from point A to point B. Let me give you a quick example. Steph and I are working with an organization that is in cancer research and supports cancer. Women are going through gynecological cancers. And Steph had a call with them or a meeting with them, and they produce chemo shirts. So they have a little zipper where you plug the port in and everything. And she was saying how expensive the shirts were to make. And Steph just simply asked the question, well, how come you're not talking to a Hanes or a Fruit of the Loom? And in that moment, Steph, I'll let you finish the story, but it was astonishing, the response.
So there was someone that was on their board that said, well, I know the CEO of Hanes, so we can have that conversation, but no one had asked. No one had thought to bring that one topic up.
It's just a matter of continuing to talk about where you're going. Finding, and this is something that I've worked with a ton of CEOs on when I was on the CFO side. What are the drivers of your business? All your bankers, all your CPAs says, oh, you've got to be looking at your P&L. You've got to be looking at your balance sheet constantly. And that's good. Don't get me wrong. I'm a CFO by heart. So I'm going to say you probably should look at those documents. However, as a founder, you've got so much time in your day. You cannot spend all your time looking at financial reports. You need to know if I add $1 to this bucket, it's going to increment my business. For example, if I can reduce my expense per unit by 50 cents, I'm going to automatically increase my margin. What's the drivers? Selling more product. It's, most businesses focus on the expenses because it's super easy. They're right in your face. Well, if I can just reduce my expenses, I'll make more money. 95% of businesses need to sell more. Figure out a way to sell more and you'll automatically grow your business. So those catalysts, you want people that are going to buy into what your catalysts are and invest in those items.
Talking about buy-in, when you were talking to your investors, another mindset that you always have to keep in mind is you're going to keep growing, right? So if you go to an investor and you say, we're doing a capital campaign, we're going to raise $5 million, we would ask for an investment, and you have listed all of the things that you are investing this in. You then tell them that if you reach the $5 million, you don't need to raise more money. So you have painted yourself in a corner because as your business continues to grow, you may need to go back to that investor and ask for more money. So it's important that when you are talking to your investors, you are telling them, at this stage, we're raising this amount of money. This is what we're raising the money for. Our future goal is to do this, which should link to your vision statement. That way you've left the door wide open that, hey, we met this goal. This is what we did with your first investment. Here's where we're going. Are you interested in coming alongside of us again and reinvesting to get to our next?
That's a great
excellent point. That's an excellent point. And Abby, I see your comment in the chat, and I'm sorry you've been underfunded for 15 years. That's got to be extraordinarily stressful. And again, when we're putting together those pitch decks, it's crucial to be able to know where you're headed, to be able to say, hey, the hiring that we need to do is in these buckets. Abby mentioned the fact that, she's been bootstrapping and underfunded for 15 years, and hiring is essential to turning capital to profit. That's 100% true. You need people to do work. No question about it. You need suppliers, you need warehouse space, you need manufacturing equipment, all of the things. But you need to be selling the investment opportunity in terms of outputs instead of expenses.
Scott, I'm going to interject a little bit of a live example. Scott and I work with a client who has received big opportunity for millions of dollars. And the client said, to do this, we have to hire staff. And the investor said, I'll pay for anything except staff, and I am not paying for your staff. I'll pull the investment now if that's where the money is going. Now, the truth is they cannot produce what they need to produce without doubling their staff. It's not feasible. So what the investor is going to invest in is the product. So not misleading the investor, but you've got to build in staff somewhere. So you can still build in staff without absolutely throwing it in your investor's face that you're using all of their money towards staff.
Again, yeah, that's a super important point, because I've been through a couple of these rounds where I had one instance where we were trying to raise like 15 million, and we had 35 pitches to private equity firms, and not one of them lasted more than 15 minutes. Well, you can't say a whole lot, especially me, as you can tell. I can't say a whole lot in 15 minutes. And then you're talking about going over your vision, your mission, your opportunity, the investment things, and your P&L for the last 5 years, and get them to be on board within 15 minutes. You don't have a lot of time to be able to convince people. They're either going to be into what you're doing or they're not. So the other thing I would say is, don't necessarily stress out on the no's. Think about where you want to ultimately get to, and really focus in on those folks who buy into your vision. So let's go back to Kate's original question. Where do you find those people? It's about your network and expanding your network immediately to those folks who are connected to the folks that you trust, right? I mean, find out the people that have been alongside you, your customers, your suppliers, your bankers, your insurance folks, your attorney, your CPA. All of those people are dealing with people like us and with people in the investment world, and are looking for opportunities. Start with the people who know and trust and believe in what you're doing, and then work your way outward. Connect with them on LinkedIn. And when you connect with them, connect with the people that they connect with, and build your network in that realm.
Well, it kind of reminds me too of like, when you're looking for a job, one of the things that I learned was to do informational interviews. And so you're not going in there like, hire me, or like, what are you hiring for? And I'll figure out how I can fit that role. It's sort of like, I want to learn from you. Like, what are you looking for? What is your company like? What is it like to work here? And just sort of learning about what this person is and seeing if you align with the values of that company. And it kind of reminds me of the same thing you're talking about, just sort of
No,
like
it's totally the same. You're 100% right, Kate. 100%. You are interviewing them just as much as you're interviewing for them, right? Because again, you want a partner to help you grow your business. As Stephanie said, there may be a time where you're going to say, hey, this person gave me $10,000 when I was, still working out of my garage. I know they have the capacity to give me $10 million. But they're not going to do that until I've proven the concept and I'm moving on. You want them to continually be part of what you're doing and coming alongside of you. That's why they've got to bring something to the table other than the money.
Mm-hmm.
You want your investment group to actually introduce you to other investors that may be interested. Go ahead, Kate. I'm sorry.
Yeah, no, it seems like there's a lot of like, an element of storytelling that's involved there too, because you want to get people really, in in the same house with your vision and really, really following along what that story is and buying into it and being part of it. So like along those lines, I mean, when you're talking about presenting information to an investor, how much of that is going to be the data on, you know, numbers and metrics versus like the skills of the founder, like the soft skills maybe of the people on your team that are going to be able to share that mission, that, you know, maybe there's more value there, because I've heard, you know, investors will invest in the founder specifically. So what do you see as that kind of balance?
That's a great question, because it's 100% true. And as much as I was saying, you have 15 minutes to tell your story, you know, a good portion of that story, you're going to send them. Let's think about the process for a second, then I'll back in to answer your question. If you think about the process, you're going to have this interview essentially, where you're going to share your vision and you're going to tell them what you need. I need, you know, $5 million and I'm willing to give up X% of the business, or I'm willing to pay this amount per unit until it's paid back. We'll talk about that in a little bit. You're going to send them your P&L for the last X number of years. You're going to send them your projections. So I am a firm believer that, and you have to read the room a little bit, but they're far more interested in what you're going to do with the money and how it's going to magnify what you're currently doing than they are about just debits and credits and pluses and minuses. Because I can tell you right now, whatever projections you give them, they're going to discount. You need to know that as well. If you tell them, hey, if you give me $1 million, I'm going to be able to do 10x what I did this past year, they're immediately, all investors are skeptical. They're immediately going to say, yeah, okay, yeah, there's no way. Because keep in mind, if they're a venture capitalist or a private equity firm, it's all about increasing the valuation. If they can get you at a lower valuation with their money, and you do 5x instead of 10x, they make a pile of money.
Scott, before you move on, I just want to visit something that you had said earlier about, you know, nonprofits sometimes just have donors. They don't have investors, right? So if an investor is thinking about, how am I going to claw my money back? How am I going to turn my income? Not everybody has to be an investor that gets a percentage back. You can approach some people to just be a donor into your company. And donors will a lot of times give money just to the vision, because they believe absurd snacks. Sorry, I know it. We talk about it all the time. Someone would sow into or donate into or invest without a percentage back, just because they may have a child that has a peanut allergy and they are so excited to get the snack in the marketplace that they're going to donate just as seed money to get you started.
Yeah, that's super important. That's an interesting, and it's even more so applicable to purpose-driven brands. Now, is that person going to give you the significant sum of money you may or may not need to increment your business? Probably not. It's possible, but probably not.
I mean,
so
that's
one of the
along
things,
the lines of like crowdfunding, right?
yes, it is. One of the things that, you know, we talk about a lot, and we've done some investing with a small startup in the coffee industry. We did a revenue-based investment, which is kind of a hybrid of the two, right? So we want to be investors in his business. And we would recommend, and hear me when I say this, don't give away equity unless you have to. This is your baby. This is your vision. The more you dilute the value of your capital, the less, one, you're excited about it, because all of a sudden it's no longer yours, and the less opportunities you have for growth, right? You want to hold on to that as long as you possibly can. So what we've done is we created a revenue-based lending model. So let's say we give $10,000. We want a 10% return on the first top line dollars until that's paid off. So unless you're making money, I'm not getting paid. We're not getting paid, right? So the minute you make money, we get paid back. And there's a time frame. So let's say it's a 48-month or 24-month turnaround. And at the end of that 24 months, if that loan isn't paid back plus a guaranteed return. So for example, $10,000 investment, we want $1,000 in return. So it's an $11,000 commitment by the company. They're paying it back at 10% of their top line revenue for 24 months. At the end of that 24 months, if it's not paid back for the next 3 months, the guaranteed return doubles. Right? So now it's a $2,000 guaranteed return. And if it's not paid back at the end of that 24 months, you can either pay it back in full or it converts to equity at a stated rate that the investor decides. Now, the upside of that is you're not having to make any payments back to the investor, the lender, until you're making money. Really good for startups. Until I'm making money, I don't have any money to pay you. I'd rather invest the money in growing the business. And as an investor, that's what we want too. But it also puts some skin in the game for you saying, okay, I have to think about, because a lot of startup founders aren't paying themselves at all. I have to think about, not only do I have to pay myself, but I also have to pay this lender back.
And there's a small opportunity for the investor to then get involved, right? You're a startup company. You've now made it important for the investor for you to be profitable. The investor is probably going to tell everybody about that coffee, as Scott used that as the example.
So again, I mean, does that work for a larger scale investment? Sure. Does the parameters, hey, my guaranteed return doubles if you don't pay within the first 24 months? You make those parameters, and that's a negotiation tactic. But it helps to ease you into, if you haven't had outside investment before, it helps you ease into bringing in some people that are going to help you along the way, and allows you to not have to give up control in any way, shape, or form in the term of equity to get the money. It's kind of like a loan from the bank with benefits at the end, right? Because you're now bringing in a partner. That does not discount the fact, though, that you want that partner to buy into your vision as to where you're going.
Mm-hmm. So what are some things that like those investors can also do for your brand aside from just injecting some money? I mean, if they have like the financial savvy, I mean, are they able to help with, getting some kind of financial documents prepared or helping review some kind of processes? Like what are some other things that you could ask of investors that would be able to help you besides just the money?
I love that, because now we're thinking about partners, right? We're not talking about just money people. We're talking about people that can actually add value to your company. So there's a lot of money in the marketplace. We've never had more billionaires and millionaires as we have right now. And because of the way the economy is going, there's some interest like, okay, yeah, I'm getting a little bit of money out of the market, but the market's on the way down. I'm going to have money set aside that I still want to be active. This becomes an opportunity for you to interview them to make sure they're sharing into your vision and making sure they are going to be adding value. So as Kate mentioned, you want them to, when I'm looking at an opportunity, I want to understand that they're interviewing me. I've got 30 years of experience in financial and operational efficiency. They're interviewing Steph, who's got all kinds of the HR and processes and all of the stuff that I don't want to do and founders don't want to do. She's an expert at and really likes. That makes her a little odd, but she's really, really good at it.
I was like, I know he's going to poke fun at me.
Yes, you are. The stuff that you love, most people do not like, but I am so very grateful that you do, because it makes our lives easier. 1 + 1 is greater than 2. That's the whole thing. So maybe they've got a background in marketing. Maybe they've got a background in sales. A lot of investors, and this was interesting when I went the PE route, a lot of investors are engineers for some reason. it's not totally, doesn't seem to make sense to me, but they have a logical way of processing things. So maybe they can help you from a operational efficiency standpoint. You don't know until you ask, right? And that's why you have to do your homework for the people, stalk them on LinkedIn. I used to have, actually, in my office right here, I could pull out a folder that's probably about 2 inches thick of all the people that we've met with. And I had bios and histories of every single person, because I wanted to know, if you're a mechanical engineer and our company was trying to do something in the manufacturing space, yes, I want your money, but I also want your expertise to come to the table and help me do what I do better. This is also the difference between your venture capitalist and your invested angel and or sometimes, to some degree, a private equity firm, because oftentimes private equity firms will narrow the niche in which they work. A venture capitalist says, look, I'm going to give you money, I'm going to charge you loan shark rates, and I want to get out in 2 years. That may be a way to go. Obviously, venture capitalists have done very well for themselves. I would suggest, for a purpose-driven brand, you really want somebody and some company that understands that you not only want to make money, but you also want to change the world. That's
Scott, this is
super
a good
important.
time to ask everyone, do they have experiences where investors have done more than just invested financially into the company? I'm all about sharing is caring. And if we have a lot of smart people on the call, let's hear from you a little bit about when an investor invested greater than financial capital and what that meant for your company.
Yeah, that's a great question. If anybody has that example, please feel free to come off mute or add that to the chat. And yeah, maybe we can hear some real-time example of what that might look like to have an investor kind of going above and beyond and support. Oh, Lars, did you have an example?
Well, some experience with that, yeah. I surely agree. It's always nice to find investors who bring in more than the money. Sometimes it also can be an extra burden, right?
True.
I have the vision for my company, raise money for it to fulfill it, and maybe try to find the people who have a fairly like-minded vision. But still, everyone has their own sometimes. And that leads into, you have tons of discussions, this is what you should do. And then you try to scale them back to yours maybe. You certainly want to learn from them also, or get their ideas. They are shareholders, right? But you still want to follow yours.
Yeah, that's Lars. That's a great
question then
comment.
really is, how do you handle all those different opinions? I mean, the one says, hey, you have to grow organically, keep it small, and just build your traction in the beginning. And be as frugal and with the money as possible. The other one says, who maybe has his experience from a large corporation, or get all the money you need and pump it into the market and immediately approach target. I mean, both can be very valid, but you have to coordinate them. So what I actually did is I created, which can also be a difficult task, but I put a little pool of investors together and said, well, you're all invested. You talk to each other first, and then we have a call.
That's awesome.
Love that. Love that.
So at least they maybe try to figure out their joint opinion, and then I try to have a call and bring them together. Can also be dangerous, because if there's just one in the group who says like, he didn't do what we wanted, or he didn't realize what we achieved, well, everyone is then on that negative term also. But that's the risk you have to take. But so it's not easy to always have those discussions, and sometimes it's also, it depends on what types of investments they put in. But if there's someone who puts in $100,000, I see it as real money. I mean, 50,000 is also real money, so is 25,000. But the one with 25,000 or 50,000, maybe I don't listen too much as the one who puts in 200,000. And I'm very early stage. I'm going after angels, and perfect angels might also be the dentists.
Mhm.
And well, I with those dentists, I primarily just get the dollar.
You know, and Lars, you brought up a handful of very important takeaways that we can walk away with, right? So you have to know who your investors are. And if you're having conversations, sometimes you have to steer the conversations because it is, as Scott said, still your baby. And you know, if you have investors that are putting in large sums of money, of course, every investor that puts in money is an investor that puts in money. But if someone gives you $100,000, your mindset may be, well, if they gave me 100,000, they probably can give me more. So let me have some deeper conversations, not to manipulate them, but how can I bring them alongside of what is going on? Because if they give you $100,000, they're somewhat invested, right? So that was
I
great
love that, yeah.
information, Lars. Thank you.
That is good information. I love the fact that you mentioned the dentist, right? That was one of the areas that we didn't go into as a potential for investors, but complementary businesses and products is another avenue where, you know, we talk about in our business channel partners. Kate being a channel partner, right? We know enough about marketing to be mildly irritating, but not dangerous, right? So if we get to a point where we're going to call Kate and say, hey, help us with this. And, you know, we get to a point where we need a CPA. It's the same thing. If you can find a complementary business that is going to grow with yours, that's another avenue where you can tap into their vision and kind of create, I don't want to say this the wrong way, but almost like a joint pathway to success. I want to be careful not to say joint venture because that's not what I'm talking about,
Right.
but a common goal that you're trying to reach. Right. So I appreciate that. And Lars, I appreciate you saying, hey, it's not always easy to bring in people that actually share the vision, because all of a sudden they want to take over and share their vision and add it to what you're trying to accomplish. I appreciate that very, very much. So, and I like the idea. I love the idea of bringing in an investor pool so that you can create almost a funding company that you can tap into with your initiatives. It's kind of like having a nonprofit board of directors that is going to kind of curate your funding for your projects and kind of be a back office approver of where you want to go. So I appreciate you saying that. Anybody
Well,
else got anything I want to add? Sorry, Kate.
yeah, I was going to say, it's just interesting how, you know, you're talking about people walking together on that path. And it's like, you know, Lars made the comment, okay, people have different visions and they might not necessarily jive, but like your vision doesn't necessarily have to be like every single thing that you think it should be. You know, all the pieces like have to be done a certain way. It's more like that end goal of where you're all sort of working towards. So, you know, if your end goal is like, you know, reducing waste or whatever, then it's like that's not a specific, it's not so specific that nobody else is going to be like, well, that's not exactly what my vision is either. You know, it's like being a little bit more general maybe allows people to kind of join along and still fulfill their vision in a little bit of their way too.
Kate, I love that you brought that up. And Scott and I often talk about that as we are helping clients, but also with the client. So everyone has a passion for their company and they have you know, some, hey, here's how I'm going to get there. And, Scott and I help people if they say, well, here's the big vision and I don't know how to get there. But when you are packaging what you're going to say to your investor, investors don't care about the tiny details most of the time, right? You need to care about the details. So when you are, and this is more Kate's area, but as we start talking about investors and pitch decks, when you're handing them things that they have to read a whole lot, or they have to be over communicated, or you're so in the weeds with, various things, you lose your opportunity to get the general shared vision of where you can go. And so too much detail will sometimes shoot you in the foot.
For sure. Okay, so we've got another question here. Oh, this
Yeah,
is
I'm looking
from
at your
Matthew.
question here, Matthew.
Yeah.
Yeah, how do I solve this problem? Well, that's the that's the $64,000 question, right? And it's interesting. You have an advisory board that's saying raising capital is a full-time job. Why aren't they helping you do it?
I've been at this for a while. I made the typical entrepreneurial mistakes, and I tried to go far instead of going local and deep. And so we've for the last 18 months, we've been correcting that. We've been pulling back, and we've been focusing on local and deep, and we're seeing the sales benefit of that, but it's still not quite there. People throw out ridiculous things. They want you to be growing 30, 40, 50% a month, which is pretty stupid. There's rare companies that do that, but not companies that are trying to be profitable. And so what we've been doing is just trying to correct that sales story that, okay, we're focusing local deep, we're taking command of our own backyard, and we're growing at, we grew 68% in the last, from September to September, in some regions, right? And so they're like, look, you need to focus on these things, and you don't have time to raise capital. They know I need capital, but I'm running the production facility, doing the administration, a lot of it remotely, and then I'm on the road selling. I've probably put 6,000 miles on my car in the last 2 months, and it's going positively. But how do you fit raising capital into that program?
Congratulations, by the way. 68% year over year is absolutely out of control, exciting. So you should take a moment, and all of us on this line, we've all started from a position of zero, right? So take a moment on a fairly regular basis to say, all right, I am not 100% where I want to be, but I got to congratulate myself that, hey, I've put in a tremendous amount of work and we're seeing the benefit of that. I would go back to your advisory board and say, all right, guys, I need capital. I need to hire staff to take some of the administrative burden out, because I can tell the story better than anybody else. It's my vision. So in order for me to be able to grow the company, I need to be able to fill the seats with administrative and operational staff. And to your point, hiring people is not a bad thing. Selling the investor on hiring people creates a check, I guess I should say. So when you're talking about, hey, I need to hire people for production and hire people for administration, I would think about it in terms and pitch it to the investors in terms of, if we can add some production capacity, it will enable us to do X. If we can add some operational processes or back office processes, it'll allow us to, the throughput will be faster. Just changing the nomenclature a little bit will help grease the wheels a little bit. But I think I would say to you, if we were sitting down one-on-one, Steph and I are sitting down and saying, how do you do this? I would absolutely try to get your advisory board engaged in finding funders. Like, okay, if they're not bringing you operational efficiencies or administrative efficiencies or any other value, and I'm not trying to knock your advisory board, please don't misunderstand me, but their primary job is to, hey, you know what? You bought into the vision. You got to help me fund it. I can't do both. I either have to run the company or I have to find the funders. So if they can even take half of that burden away from you, it would be a tremendous amount of value for you and keep you from, getting gray hairs trying to do 20 jobs at once.
So I know we have 8 minutes to kind of talk
Come
through
on,
some
I
of
need like
these
another
things.
couple of hours. Let's go.
He doesn't talk a whole lot. For you that don't know him, he's pretty quiet most of the time. Anyway,
Very reserved.
you know, Scott and Matthew, you bring up such good points. Are you talking to your advisory board or your board in general? For those that have a board, have you set the expectations? So a lot of times Scott and I will work with a client who has a board, and we say, okay, you know, what's your board doing? What do they bring to the table? And, you know, will they give me good advice? Well, that's why you're working yourself to death. So ask your board for help, right? And if
Specific
they-
asks is a good idea.
Right. You know, when we were talking about the Haynes CEO earlier, that was someone that sat on their board and they just simply didn't ask the right questions. So when you're talking to your board, you say, hey, as we go into a capital campaign, are you or can you invest into our company? Who is your sphere of influence? Who can you get me in front of? Because if they can get you in front of 5 people, that's 5 people you didn't have to track down. Maybe you are, you have someone on your board that's a great project manager. Well, if they are helping you do your project managing, then you don't have to be the person that's doing they are now invested and they're an active board member. So go back through your board if you haven't already and say, what can my board bring to the table? And is this the right board to have for this company?
I think also this is a perfect time of the year to do it, because you can sit back and say, okay, as we go into the new year, let me just reiterate as the founder what the end goal is. Let me reiterate the vision, and then go back and say, okay, here are the mission objectives to get us closer to the vision. And then simply ask the question, how can you guys and ladies and people on our board, how can you help me execute on these mission objectives? And then just stop talking and let them do their thing. And then give them executables, right? People are on boards because they want to help. But if you don't give them something to do, they're going to check out and just give you advice that you don't necessarily want.
Or they just become a face on your website.
Yep, I agree with that.
Well, and I think Scott and I were talking about this a few days ago too, but it's like, I mean, as a founder, it's just not realistic that you as one person are going to know everything about financing, about productivity, about operations, about marketing, about sales. I mean, that just doesn't make sense. And you're only going to be able to get so far if you're trying to do it alone. And so, yeah, being able to leverage the people that have, you know, more expertise in those areas might be able to get that needle moving a little faster.
And Stephen asked, what are the impact metrics that matter these days? As a financial person, it's one answer, right? You've got to be able to be profitable. Your profit per unit, if you're a CPG company, your profit per unit is an important metric. However, as an impact company, it goes back to your vision. What are you trying to accomplish? What is your purpose that is of equal value as your profitability? Why did you start this business? What universal problem are you trying to solve? And how is what you're doing today getting you closer to that goal? And those would be things that I and Steph and private equity firms and venture capitalists and angels, they're going to want to know, if I give you $1 today, how is it going to solve this world problem? Those would be the metrics. Again, you're going to give them the financial numbers regardless. So make sure that your numbers are tight. Make sure you have a CPA looking at your numbers, or you have an internal person that's looking at your numbers to make sure they make sense. We've invested in a couple of companies and helped a couple of companies where we're doing $5 million in revenue and we only have $2.50 in receivables. Well, that is not right. There's no chance. We sat down, they didn't get funding. We sat down with them for 5 minutes and said, oh, well, you're booking this wrong and this is wrong, and fix those things. And all of a sudden their valuation went from 0 to $750,000 in a matter of 10, 15 minutes, right? So that's a hyperbolic example, but know that your numbers are right and know what those mean to you and how they impact and tie into your vision.
Awesome. Well, that sounds like a good place to end it on. Very specific advice from Scott and Steph. So thank you all so much for your questions. I hope we were able to answer them. If not, please feel free to reach out to me. My email is kate@brandpollinators.com. Happy to help with anything I can. Scott and Steph, please share your info that you're willing to share. I know you guys do one-on-one exploratory calls. I think you were going to offer a special, like discount for our audience that's here today. So
we absolutely can do that. We absolutely can do that. If
awesome.
you want to get in touch and go a little bit deeper with what we have, please, 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 please go to our website, silverbackventures.org. Email me at scott@silverbackventures.org or Steph@silverbackventures.org. I'm going to even put my cell number in here for those of you who stuck around after time. That is my cell number. Text me, call me. I would say, because you guys aren't on my phone, to make sure you text me first, because otherwise I probably will let it go right straight to voicemail. Just being straight with you. So, but if you want to get in touch and go a little bit deeper, please let us know. We are here to help amplify the amazing work that you're doing. And thank you so much for hanging out with us and listening to me drone on and on.
No, it's fabulous. I really appreciate your insights, and hopefully that was valuable for everyone. Again, I just shared our link to our newsletter in the chat here, but please sign up if you're not already a member so that you can get updates on future events like this, and let us know how else we can help support your impact brand. So thank you all for joining us.